Yeah, I don't want to change something too drastically and then mess it all up. View. Let's go here to slideshow. Okay. I'm not technical support. I'm just going to say that right now. If you have people here that know the technology, inshallah, they can do that. Sure. Or we just leave. That's it. Everyone will stand in front of the door. You said someone's coming? No, they can't do anything about it? Okay, plus. All right, Bismillah. Bismillah walhamdulillah, wa salatu wassalamu ala rasulillah, wa ala alihi wa ashabihi wa man walahu wa ba'd. So today we want to talk about a number of very important topics. Estate planning, essentially how do you plan for the money and the things that you're going to leave behind. We're going to talk about Islamic wills, talk about life insurance, the ruling on life insurance, types of life insurance, how to determine eligibility, Social Security, and Medicaid. I'll be taking care of the first half of the presentation, and then our brother Osama, inshallah ta'ala, will take care of the second half. Now, of course, as a disclaimer, we want to make sure that everyone understands that we're not here to offer financial advice. We're not telling you exactly what needs to happen in your situation. This is educational and informational, an informational session. And what might be fitting for you and what your needs are may be different. So we're here to educate you on the possibilities of all of these topics. And inshallah, hopefully you'll be able to make the best choice after having received this information. So my wasiyah, myself, IKHLAS Insurance, and any of our associates, we're here just for informational purposes to educate. Let's begin with a very important framing of the topic. The Prophet ﷺ was with his companions. This hadith is narrated in Sunan Abi Dawud. فَخَطَّ خَطًّا مِنَ الْيَمِينِ إِلَى الشَّمَالِ. The Prophet ﷺ drew a line from the right to the left. And then he drew a line, وَخَطَّ مُرَبَّعًا حَوْلَ ذَلِكَ. He then drew a rectangle or a square around that line, with one end of the line jutting out from the side, as you see with the arrow point there. He then drew small lines from the top of the box, hitting the line in the middle. He then pointed to the line in the middle and he said, هَذَا هُوَ الْإِنسَانِ. This is man. وَهَذِهِ هِيَ الْأَعْرَاض. And these are setbacks. إِنْ أَصَابَهُ هَذَا أَخْطَأَهُ هَذَا وَإِنْ أَخْطَأَهُ هَذَا أَصَابَهُ هَذَا حَتَّى يُدْرِكُهُ الْمَوْتُ وَيُحِيطُ بِهِ أَجَلُهُ أو كما قال صلى الله عليه وسلم. If he is hit by one setback, another setback misses him. And if another setback misses him, he is hit by another until death comes to him and he is encompassed by his lifespan. Each and every one has hopes, we have dreams, we have things that we want to see happen in life. The reality is, كُلُّ نَفْسٍ ذَائِقَةُ الْمَوْتِ. Every soul shall taste death. So death is an inevitability and it is a reality and it is something that we as Muslims must speak about frequently. As the Prophet ﷺ has said, أَكْثِرُوا مِنْ ذِكْرِ هَذِمِ اللَّذَّاتِ. Mention much that which will cut off all of your desires. Al-maut, death. So by mentioning death, we're actually able to prepare for death more appropriately. We're able to prepare for death in a better way. We're able to have a more healthy mindset about what it means to die and the reality of death. Allah subhanahu wa ta'ala says, وَجَاءَتْ سَكْرَةُ الْمَوْتِ بِالْحَقِّ ذَلِكَ مَا كُنْتَ مِنْهُ تَحِيدٌ. And when the drunkenness of death comes to you, that is the thing that you are avoiding. So each and every one of us, we have an aversion to the idea of death and dying. But the believer understands that death is simply a transitional point in his longer life as a believer. The believer doesn't believe that he is man from the time that he is born until the time that he dies, and then he didn't exist before and he won't exist afterwards. The believer knows that his soul was created when Allah took it from the back of his father Adam and allowed it to stay in the barzakh until he was born, and that his soul will exist after his death and will wait until it is resurrected along with his body. He is judged and held accountable, and then either to heaven or to hell. So the definition of an insan, the definition of man, is much more expansive than what we give ourselves credit for. And when we keep that in mind, we understand that the responsibilities that we have in this life extend beyond our lives into our death. Which is why a person who does good will be rewarded for guiding others to good. One who shows others good will have the reward of the one who had done them. من سن في الإسلام سنة حسنة فله أجرها وأجر من عمل بها لا ينقص من أجورهم شيئا. As the Prophet ﷺ said, whoever creates a good tradition in Islam, they will have the reward of it and the reward of all who act according to it. Their rewards will not be diminished in the least. وَمَنْ سَنَّ فِي الْإِسْلَامِ سُنَّةً سَيِّئَةً فَلَهُ وِزْرُهَا وَوِزْرُ مَنْ عَمِلَ بِهَا لَا يَنْقُصُ مِنْ أَوْزَارِهِمْ شَيْئًا. And whoever creates a bad tradition in Islam will have the sin of that and the sin of all those who acted accordingly. Their sins will not be diminished in the least. So whatever we do in this life will extend beyond. And therefore, it's very important that we think about preparation for death and after death in terms of emotional investment, financial investment, and most importantly, spiritual and religious investment. It is said that people who mention death more frequently, and these are statistical studies in a topic, an academic topic, which is known as, what would you guys guess would be the name of the academic topic studying the idea of the effect of death on giving and estate planning? Not psychology, but good guess. Jurisprudence, no. It's called terror studies. A phrase that we generally would not repeat in Islamic centers 10 years ago, but I think things have lightened a little. So the idea of terror studies is the study of the terror that a human being feels when he thinks about death and no longer existing. And studies have found that even atheists who proclaim that they do not believe in a higher power and they do not believe in a next life still feel anxious and afraid of their own death because they know that is or they think that is the finality of their existence. And so even atheists will try to do charitable works and good deeds to allow themselves to be remembered after they die. So the more that you talk about death, the easier it becomes to die. The more that you talk about death, the less painful you will have of a death. The more that you talk about death, the less painful it will be for your children and your loved ones to continue after your death. Why? Just as the Prophet ﷺ said, أَكْثِرُ مِنْ ذِكْرِ هَذِهِ مِنْ لَذَّاتِ. Remember much what will cut off your pleasures. So when you condition yourself to death being something normal that will happen, as a believer, you should also be conditioning yourself to want to meet Allah. As the Prophet ﷺ told Aisha, من أحب لقاء الله أحب الله لقاءه ومن كره لقاء الله كره الله لقاءه. Whoever loves to meet Allah, Allah loves to meet them. And whoever dislikes to meet Allah, Allah dislikes to meet them. So the more we prepare ourselves mentally, the easier it will be even just to have a physical death. It also will make it easier for us to have these conversations with our families, as unfortunately, too many of us never talk to our families about these issues. And it can be sometimes a very difficult thing for us to bring up, both as parents to our children, as children to our parents, and brothers and sisters and siblings alike. Many times people will come and they'll say, I tried to talk to my dad about getting a will, and he just got angry and he told me to shut up and he told me to leave the room. And if I was still young and living at home, he probably would have grounded me and, I would have gotten in trouble. I said, well, what did you say? So I said, Dad, you're going to die one day. You need to get a will. I said, if I was your father, I would have kicked you out of the house too. I mean, what kind of conversation is that? If you want to have a conversation with someone about this topic, you have to approach it in a way that is palatable to them. So you can't just go with, hey, guess what? You're old. You're going to die. It doesn't work like that. One of the ways that you can bring up the topic is you can say, I often think about what it's like in the last moments of my life. What are you talking about? You're so young. Why are you worried about that? No. I'm just saying, like, if I were, in the last moments of my life, I would want to be with you. I would want to be with my family, all our family members. What do you think about that? Oh, well, definitely. If I were in the last moments of my life, I would want all of you around me and to be able to enjoy those last few moments together. Okay, so what do I need to do to make that happen, Dad? What do I need to do to make that happen, Mom? Oh, well, in that case, we should probably have some way that we know how to get in contact with each other. Oh, so we should write things down. There's your key. Now you've got them open to the idea of recording information, writing the names down of family members. We need to know where your stuff is. We need to know, well, actually, there's a thing called a will. We should get one of those for you. Because if you get too long where a person's incapacitated and can't write a will, it's too late. You can't go and write a will for someone else. They have to write it for themselves. So the idea of death and talking about death is very important. I recommend a book called Talking About Death Over Dinner. And this was a book that was written by a researcher on the topic of death. And he actually kind of puts prompts in the books. And the idea is that bringing people to a casual setting like dinner and talking about death and final arrangements and final plans and what they need in their old age and when their end-of-life care becomes easier when it's brought up in a soft, casual manner. So I recommend everybody to read that book as it's a beneficial book in this topic. Okay, so if we're talking about preparing for death and we want to prepare for death Islamically, legally, we need to do a few things. We need to be preparing for the payment of our debts. As the Prophet ﷺ was approached by some people who wanted him to pray the janazah over one of their dead relatives. And he said, وَهَلْ عَلَيْهِ مِنْ دَيْنٍ? Does he owe any debts? And they said, yes. He said, إِذَنْ صَلُّوا عَلَى صَاحِبِكُمْ. In that case, you pray over your family member. And then one of the companions there, he said, Ya Rasulullah, ana laha. I'll take care of the debt. How much does he owe? He owes 1 or 2 dinar. So the Prophet ﷺ prayed over the janazah, and the man was buried. 2-3 days later, the Prophet ﷺ saw that companion who took it upon himself to pay that debt on behalf of the deceased. He said, Ma ba'al dinarain. What happened to the 2 dinars you're going to pay? Al-ana qadaytuhuma ya Rasulullah. I actually just paid them, O Messenger of Allah. He sallallahu alayhi wasallam said, Al-ana baradat jildatu. At this moment, his skin cooled down. So the punishment of the grave happens for doing things, for neglecting rights in this world. When you neglect the rights of others and paying them back the money that is owed to them, then that is the cause for the punishment of the grave. When you neglect the rights of others to not backbite them, that is a cause for punishment of the grave. Another thing which is a cause for punishment of the grave is neglecting the right of your body to be in a hygienic and pure state. So a person who doesn't protect themselves from urine and things like that when they go to the bathroom, that's another cause for punishment of the grave. But we're not going to go down that path of these issues that have to do with that. But just to mention that as Muslims, people that we owe money to have the right to be paid back, and we should be making arrangements for that. As we said yesterday, that the Prophet ﷺ said, if I had the like of Mount Uhud in gold, I would not sleep for 2 nights until I had spent all of it in the path of Allah, إِلَّا شَيْئًا أَرْصُدُهُ لِدَيْنِ, except for some amount that I hold back to pay off debts. We should be taking care of funeral costs. This is a very important topic. I just met this morning with Sheikh Furhan Zubairi, my friend, and we were mentioning this. He said, can you imagine how much funeral costs are in SoCal now? I said 10,000. He said they've gone up to 20,000 now in some places. Unless you want to go to the middle of the desert. He didn't say that, but I'm saying I would imagine if you go 100 miles outside of the city, you can probably find it a little cheaper, but who wants to do that, right? Which means that we have to prepare for funeral costs to be paid because everything, unfortunately, is related. There's an expense related to it. We should also be preparing to give advice to our relatives. As Allah subhanahu wa ta'ala mentions about Yaqub alayhi salam, that Yaqub alayhi salam said to his children, "Ma ta'buduna min ba'di?" Who are you going to worship after I die? قالوا نعبد إلهك وإله آبائنا. We will worship your God and the God of our forefathers, Ibrahim and Ismail and Ishaq. So there's an idea of leaving advice to our families, and this is something that was normative amongst early Muslim generations and throughout Islamic history. It's one of the meanings of wasiyah. One of the meanings of wasiyah is personal advice to family. Another meaning we'll talk about is the 1/3 that you leave in gifts to non-relatives. If you have minor children, you're going to want to think about the money that's going to be left to them and how that money is going to be cared for. And those usually go into a trust. You're going to want to think about the distribution of your inheritance, and that happening according to what's valuable to you and your Islamic beliefs and not according to the state and the state laws. You want to talk about the distribution of your charitable gifts. And we'll talk about what that means in a moment. And then guardianship for your children. Guardianship, by the way, is not the same as custodianship. Custodianship is you or the child's other parent are automatically the caretakers of that child unless disqualified by the courts. So if you or your spouse or you or your ex are not able to take care of the child, who takes care of them? A guardian. Who is that guardian? You need to appoint that guardian. Otherwise, the state will make that decision for you. Allah subhanahu wa ta'ala says, كُتِبَ عَلَيْكُمْ إِذَا حَضَرَ أَحَدَكُمُ الْمَوْتُ إِن تَرَكَ خَيْرًا لِلْوَصِيَّةِ لِلْوَالِدَيْنِ وَالْأَقْرَبِينَ بِالْمَعْرُوفِ حَقًّا عَلَى الْمُتَّقِينَ. Prescribed for you when any of you is visited by death and he leaves behind some goods is to make testament in favor of his parents and his family honorably, an obligation on the God-fearing. So if you are a Muslim, if you fear Allah, if you want to protect yourself from Allah, if you are mindful of your obligations for the sake of Allah, then you need to have a will. This is an imperative and a Quranic imperative at that. It is also from the Sunnah of the Prophet sallallahu alaihi wasallam. He said, ما ينبغي لامرئ مسلم عنده ما يوصي به أن يبيت ليلتين إلا ووصيته مكتوبة عنده. It's not befitting that a Muslim who has something to leave behind sleeps for 2 nights except that their last will and testament is written and ready with them. Abdullah ibn Umar radiallahu anhu, who narrates this hadith, he said, after I heard the Prophet ﷺ say this, I never went to sleep except that I checked that my wasiyah, that my will was written and in my home. So how many of us here go to sleep every night with no preparation? It's not befitting for us as believers. We should be obeying Allah and obeying the Messenger of Allah sallallahu alaihi wasallam. So after we have our will, how is the money that we leave behind divided up? Well, the first thing that comes out of any money that we leave behind is our debts are repaid. Debts that are documented that have not been paid and have not been forgiven by the contract behind them. Because what happens sometimes is unscrupulous debt collectors will call you about your loved ones who have passed away. Now, we've all seen this in the janazah. Somebody says, our brother Joe passed away visiting here in SoCal. And, if he owes anybody money, let us know. That's all happened in the janazah, right? We see that sometimes, right? So then you go and you make sure that that person is paid back. So that person would be paid back immediately. You have either witnesses to it or a contract. What happens, though, is sometimes someone will have, for example, credit card debt, which generally is forgiven at the time of death because of the credit card agreement. And what will happen is that they will sell the contract to that, although they've written it off, they will sell it, and somebody who has no right to collect it will call you and ask you to agree to pay them. You've just entered into a new contract to pay them money that they were never owed in the first place. So if anyone contacts you about the payment of debt after your relative dies, the very first thing you say to them is, you do not have permission to call me on my phone. Remove my number from your records and never call me again. If you'd like to contact me by certified mail to my address. And don't give them your address. They have to figure that out. If they contact you over the phone again, then you can report, you take the number, report it to a special government agency, and the government agency will actually find them and give you about a third of the money. Because it is illegal for people to collect that in that manner. Also, if they're illegal to collect debt, some companies, they're not even licensed to collect debt in your state. They'll also get fined and you can get a portion of that. But never fall into this thing when you're emotionally turbulent to say, oh, I didn't know he owed that debt. I don't want him to be, punished in the grave. Let me pay it. Because you might not have to pay it at all. It might already be forgiven. And usually it is. But what they're trying to do is take advantage of you in a difficult time. Next is funeral expenses. So you should be making, if you have wealth, you should be making some form of preparation to be able to pay for those funeral expenses in whole or in part. And you can talk to your local Islamic centers and organizations to see how to best do that. Or, and we can discuss it later, you can get something called the final expense plan, which essentially is like an insurance policy for paying those types of expenses. Then after your debts and your funeral expenses have been paid, then charitable gifting. And this is where if you have money left over, you can pay up to, but not more than 1/3 of the money that you leave behind. So let's say, for example, you left behind, $100,000. And you owed your funeral costs were $5,000 because we're talking California in the 1980s, and you owed debts of $5,000. So now you have $90,000 left. You can give up to, but not more than $30,000, meaning 1/3 of that amount, to a charitable gifting cause. That can be a person who doesn't inherit from you. That could be an organization that's doing work that you respect, or it can be a cause that's important to you. What I like to encourage everyone to do is that if you come here to IIOC and you're constantly coming here for programs and Jumu'ah and Eid and all of these other things, do yourself and your future generations a favor and mention IIOC in your will. And say, you know what, I leave X number of dollars or X percentage of my estate to the masjid that was so good to me and my family. Because no one else is going to take care of the masjid except for you. I tell this story all the time, but I'll mention it here again. When I was a student in Medina, myself and another student, we were sitting in the maqsaf. It was like, it's like the deli at the sandwich shop at the Jamia. And someone said to us, I'm from Florida, he was from Alabama, and we're like, he says, so when you guys go back, you guys are from America, right? I said, yeah. He said, so when you go back to America, does the Ministry of Islamic Affairs in America give you jobs? And we looked at each other and laughed. He got like a little offended. We said, no, we're not laughing at you. We don't have a Ministry of Islamic Affairs. How do you have masjids in America? So we get together and we pool our money and we buy land and we make it a waqf and then we start a masjid. Whoa, that's possible? Completely out of his purview. So remember that no one's going to care for the houses of Allah except for those who believe in Allah. So you need to be giving back to the organizations that are giving back to you. 10% of the yearly budgets of almost all churches and synagogues in the United States come from charitable gifting, because people are leaving money to them in their will. So as Muslims, we have more right to be cognizant of that fact. Anyone who is not an inheritor can receive from this amount. But anyone who is an inheritor generally does not receive from this amount unless the other inheritors approve that amount. Also, another caveat is that if there are debts that are owed to other family members, just because they're receiving inheritance doesn't exclude them from receiving their debt. So, for example, a child might have taken a loan from their father. And then someone says, oh, well, you're going to get inheritance, so you're going to get that money back anyway. No, you pay the money back to that person that was owed, then you distribute their inheritance to them. If a woman is owed mahar that has not been paid, she receives that money first, then she receives her inheritance. And you will be surprised, or maybe not, at the number of times inheritance is supposed to go to the mothers of our communities, but the children do not give their mother their own inheritance because they say, oh, I'll take care of mom. No, that's her right, her money. You give it directly to her. Unless she is so old that she can't take care of herself, you have no right to withhold anyone's inheritance from them. After you've gotten rid of this, you've gotten our example, we've got $60,000 left. This is called the remainder estate. Okay. Now, another very important point about this 1/3. You can give up to 1/3, but you do not have to give anything. So you can give up to, but not more than, but you do not have to give anything. I say this again because some people mistakenly think that why do I have to give 1/3 of my money away to someone? You don't. This is simply in case you have people that are special to you or causes that are special to you and you want to support them, you give it to them. For example, your stepchildren do not inherit from you automatically in Islam. If you marry and your spouse had children and regardless of whether you raised them and what the relationship, they do not inherit from you by default. So you give them a portion of this 1/3 as a way of tatyib al-khatir, to basically, support their feelings at the time of death. But the only people who will inherit are the people that Allah has dictated in the Quran. Maybe you have a cousin or a friend that you've known all your life and you want to leave something to them. You can do that, but you do it from this charitable gifting portion. Then you have the remainder estate. Who cannot inherit from you? You cannot inherit from someone if you are guilty of murdering them. That's kind of a given, but it has to be stated. Those who are enslaved or held captive by others do not inherit from those who are not, as a way of not allowing that money to then be misused by the people that it would go to. And then differing faiths also do not inherit from one another. Who can inherit from you? There are some inheritors who inherit on a quota-based basis, meaning they take a percentage as designated in the Quran. For example, I pass away, I have a daughter, I have no other children, my daughter automatically takes half. Right? I pass away, I don't have any children, my wife is automatically taking 1/4. I pass away, I only have one relative, that relative takes everything. Right? So there's differing quotas or differing percentages, and then there are some who inherit along with the people that have percentages. Now, we're not going to go into all of the details of mawarith. You have Sheikh Muhammad Zahid here. He's a person who's very knowledgeable of these things and can give you a very long class about the details of that. But I will give you a summary of these issues. There are 7 situations in which people inherit under Islamic law. In 3 of these situations, Men inherit more than women by default. Those are things like you die and you leave behind your mother and father, or your brother and sister, or your son and your daughter. Why do the men inherit more? Because the woman gets the inheritance and she has a right to maintenance and support from that male. So she gets a fixed amount and a floating amount from him. You have one situation in which men and women inherit equally, regardless of their relationship. And then you have three situations where women inherit more than the men. And those are situations where they are closer to the deceased and have responsibilities of caring for the family as well. So the Orientalist trope that women by default always take less than men is not true. And I've written an article on my website where I talk about these 7 situations and how they apply. But it's important for us to not feed into the popular tropes that are out there about these things. Next, we want to talk about the wasiyya as al-wasiyya bin nasiha. This is the idea of leaving advice to your family. This is generally not a legal document, so you don't have to sign it or have a lawyer, type it up. But you want to leave advice to your family when you pass, for them to remember Allah, for them to remain people of prayer, how you would want things to be done during your funeral, during your aza, during your how would we translate aza? As your condolences. Wake? I don't know. Wake is kind of, I just came from a wake in Michigan, so it's a little different, but it's close. It's close. You want to leave them, to basically tell them the things that you couldn't tell them before you passed away. There's a few famous examples of this. Imam Abu Hanifa, he has Wasiyat Abi Hanifa, which is printed in Arabic, where he talks to his family members before he passes away. Imam al-Ghazali, he has a book called IKHLAS, Oh Dear Child, which has been translated into English, I believe with that title, Oh Dear Child, which is very good as well. Abu al-Walid al-Baji wrote his wasiyah to his twin boys, which is very nice, right? And you have a number of different examples throughout Islamic history, but you want to say the things now, or you want to say the things that you can't say now, the things that you think they need to hear after you've passed away. Next, we want to talk about how do we get a will. There are essentially 3 ways that you can get a will. By the way, I see that some of you are taking pictures of the slide. We appreciate that. No problem. Take any pictures that you want. Also, if you have registered up front, then we will be sending the slides to everyone that registered. So if you have not registered yet, please register in the front. We will send you the slides. Inshallah, it will reach you. So how do you get a will? There is something called a holographic will. It is not from Star Wars. It is not Coachella. It is a handwritten will. What that means is I take out a piece of paper, and at the top of that paper, I write, Bismillahir Rahmanir Rahim, I, Joe Bradford, of sound mind and body, am writing this as my last will and testament. I leave my wealth to be distributed to my family according to the laws of Islamic inheritance. And I designate Sheikh Muhammad Zahid at IIOC to supervise that distribution. And then I sign it and date it like I'm signing and dating a check. If you do that and you die tonight, so everyone who doesn't have a will, go home tonight and write it out in your own handwriting. Do not type it and then sign it. That won't be valid. The whole thing has to be written in your handwriting. If you die tonight and your family finds that on your desk and they take an old check that you've signed that has the same signature and they go to the probate court, they will be able to say to the probate court, my mother, my father, my brother, my sister, whomever is the deceased, passed away last night and left this holographic will, and here is proof of their handwriting and their signature. The court will have an expert look at that, say, well, it looks to be the same. We designate you as their representative. We designate, whoever is mentioned in the will to take care of that. Is this the best solution? No. But is it a sufficient solution? Yes, until you get a better drafted will. So if you want to fulfill the commandment of Allah subhanahu wa ta'ala tonight, and you want to fulfill the commandment of the Prophet sallallahu alaihi wasallam tonight, go home and handwrite your will. Mention who from your family should supervise that, and who from which local Islamic center you want to handle your body, to handle the distribution or the calculation of the inheritance. Is that enough? It's enough for now. It's a stopgap. But you probably need something which is drafted a little bit better. And here comes two options available to you. You can go to a local lawyer, and you can work with that local lawyer to draft a will that will meet the state requirements as well as the Islamic requirements. Now, the difficulty with that is that sometimes your lawyer can draft according to the state law but does not understand Islamic law, or may actually tell you, yeah, this is definitely according to Islamic law, when in reality, it has nothing to do with it. And I've seen that happen before, right? Just because you are a Muslim and you provide services does not make those Islamic services. It's like saying, well, I'm a Muslim who sells cigarettes, so I sell Islamic cigarettes. Doesn't work that way, right? So I might be a lawyer, I might be a financial advisor, I might be a plumber. That doesn't make the services that I'm providing automatically in congruence with Islamic law. There's substantive principles that have to be included in those documents. So you can work with a local sheikh and a lawyer. That can be costly. There can be a lot of back and forth and drafting. You'll have to supervise the process, right? And if you have a significant net worth, then I think that it is befitting that you use a lawyer, right? So if you have a net worth of, say, $7 million or more, and you expect it to grow in the next couple of years, the federal limit for estate planning and inheritance taxes is 11 million. After you have 11 million in net worth, that's when they start to tax you. So in California as well, you have state taxes or state inheritance taxes as well, which I believe, correct me if I'm wrong, 3 million? If you have 3 million or more. That's correct. So at times when you have high net worth, it's worth investing and working with a lawyer to do that. The reality for most of us is we don't have that much money. And we probably won't have that much money. And so myself and a partner of mine, who actually is, he comes to this area frequently, we created a service called mywasiya.com. What mywasiya.com is, we call it a one-size-fits-most product. So if you come to our site and you say, I want all this custom drafting, I have all of these assets, it's not for you. If you have high net worth or you have a special needs child, you need to use a lawyer. If you have a high net worth or you have a special needs child, you need to use a lawyer. Why? Because there are special things that need to be drafted in that documentation to make sure that your wealth is protected or that child is protected. And I know that there's a stigma about mentioning special needs children in our community and caring for special needs children and including them in the services of the masjid. And if you feel that that stigma needs to be removed, and you want to bring services to your local masjid that can help with that, our organization in Houston, it's called Dar as-Sakina Houston. It is a special needs education and respite organization. We specialize in a few things: educating special needs children, empowering parents of special needs children to get the services that are their rights in public schools and in counties, and thirdly, in helping masjids become welcoming to special needs children. We also have a full-time Sunday school for special needs kids in Houston that has 4 locations. This started from 2 mothers of special needs children. We now have over 100 families in 4 locations. Curricula that are built for every type of learning impairment. If your child has auditory issues, visual issues, issues of mental capacity, we have a curricula that will allow them to learn the basics of Islam along with a tutor. Now, you can go to dushouston.org and get more information. And our founders, who still are active with I'm a board member of the organization. They're still active with the organization, are more than welcome to share all of the information for you to be able to duplicate those services locally. But if you're a parent and you want to protect your child and the money that they have so that when you die, the federal government doesn't say, oh, your child, we don't care if they're special needs. They have money. They have to spend that on their care before we give them any services. You all know how costly medical care is if you're paying cash. And specialized care can go, that money can burn up very quickly. So you want to have a special needs trust to protect that doesn't sacrifice the care that they're already giving. Now, if you don't have high net worth and you don't have a special needs child, you want to use something which is easy and affordable and meets your needs. Most of us, the three things that we need to take care of are our families, our homes, and our retirement accounts. The greatest wealth that we have is in those three things, right? If we have minor children, we want to make sure that they have guardians. We want to make sure that our homes are taken care of. We want to make sure that our retirement accounts and bank accounts and things like that are taken care of. So if that's the case, we created My Wasiya for that purpose. Take an online interview. It'll ask you questions about yourself, the state that you live in, and then certain things about your property. And then our will documents are created to be evergreen, meaning that if you have more children after that, they're automatically included. If you earn more assets or you buy or sell things, they're automatically included. That way you're not having to incur an expense every year to update the document just because you bought or sold something, right? And again, it's very easy. And sometimes because we are prone to thinking that an important topic like this needs to be difficult, we will many times get customer service complaints. It only took me a half an hour. Is that right? Could it be, it seems that it should be more difficult than that. And we say, no, it's not, because your situation is going to fall into a couple of different buckets. So you go online, get started now, put your email in, take the online interview, put in your credit card information, download and print it, sign it in front of two witnesses. Those two adult witnesses sign it after you. If you want to do something on top of that, you don't have to, but you can notarize it after they sign it. Now you have a legally valid, Islamically compliant will that you can go to court with, and the court will look at it and say, okay, we appoint your personal administrator to take care of this will and to do everything in it. And the great thing is, alhamdulillah, our wills have actually been probated in a number of different states. So they've already met the thresholds for being probated. So if we're talking about an Islamic estate plan, snap a shot of this because it's important. What should it include? It should include the family declaration that we talked about, which is the general advice. It should include the legally valid Sharia compliant will that we just talked about. It should include, if necessary, an advanced medical directive, or sometimes called a living will, that basically gives instructions about what kind of medical care you want at the end of life. So this isn't for after you die, but it's an important component of end of life care. It should have a durable power of attorney, which allows your family members to act on your behalf if you are incapacitated or unable to. Let me tell you a story. A man came to a lawyer that I know. He said, I want to do a full estate planning document. The guy was, I think, a cardiologist or an oncologist, something like that. Lawyer quoted him. He said, to do this for you, it's going to be like $3,000. No, that's too expensive. Cardiologist, oncologist, something like that. $3,000 was too expensive. A week later, he's on call, going to the hospital, hit by a drunk driver, permanently comatose. On life support in the hospital. Now, his wife, who he had brought over from his home country, he did the thing that many Muslim men do incorrectly, not involve his wife in any of the finances, not tell her anything about the documentation, and just give her a credit card. Honey, spend from this, and I'll pay the bill. So she spent and spent and spent until she could spend no longer. And then the credit card was shut off. And then the bank account was tapped from the money. And then the house is not being paid because he's comatose. And they said, well, she says, what am I going to do? They said, well, you have to sell the house. She tried to sell the house. What happened? His name. No, it's in both of their names. So unless both of them sign or he dies, she can't sell the house. So they said to her, ma'am, either you pull the plug and then you can sign, or you have to wait till your husband comes out of the coma. She says, no, I can't murder my husband. So what happened? The house was foreclosed on and she lost the house. All because he didn't take action to make sure that there was documentation in place that would have allowed her to make those decisions, namely a durable power of attorney. Durable power of attorney can also come up if you travel overseas. A lot of people go for Hajj and Umrah, and they leave their children with people, and then those children can't be cared for fully if something happens like an emergency because the person who's caring for them doesn't have a power of attorney. So when you sign a durable power of attorney, it should be limited to the time that you're incapacitated or out of the country and giving that person specific powers. Like, I'm going for Umrah. Until I return, my sister has the ability to act on behalf of me for all of my children's needs and medical emergencies, for example. Number 5 is a trust, if you need it. Now, in California, that might be something that's necessary, right? If you own property in California, a trust might be necessary. I won't comment on that because I'm not a lawyer, and I think that's best that you talk to somebody who knows about that. But I do know that many people in California will use a trust because the probate process in your courts here is quite long, right? So in order to avoid the house kind of being in limbo, they'll put it in a trust, and the trust passes it on to the inheritors. Now, sometimes you might need that, sometimes you might not. But you do not, if you have a trust, that doesn't preclude you. That doesn't mean that you don't need a will. You still need a will. Because a trust only takes care of property. It doesn't take care of all of the other things like guardianship, testamentary trusts for minor children, all of those things, funerals, all of that. So you still are going to need a will. Your marital property agreement is something that you can, if you decide to, have, which will separate any joint property between you and your spouse. Meaning, if you live in a community property state where the state assumes that all of your debts and all of your earnings are by default shared between you and your spouse, a marital property agreement will separate those. Now, usually when this topic comes up, many of the sisters get very angry. And they think that having a marital property agreement or a prenup that separates property is against them. And it's not. And I'm giving you the personal request that I was given by one of the sisters that I know actually in the state of California. When she married, she wanted to have a prenup. She was already working. She had a salary, an income. She owned property. She had retirement accounts. She married someone she thought was honest and good. What happened? He turned out to not be that way. It turns out that while they were married, he would take out loans in her name. He would take out credit cards in both of their names. He would cheat on his taxes, so he never had income. So when she found this out and wanted to divorce, what did he do? He claimed alimony and 50% of everything that she had. So she lost years of wealth that she had built on her own because her parents were insistent that he's a good guy, just marry him and stop worrying about such things. So if you're excited about getting 50% of someone else's wealth, you should also be excited about getting 50% of their debt. Otherwise, you should keep your finances separate and be deliberate about those things that you share. So if we're going to share this property, we're going to share it. If we're not, we're not. Well, what that means is I'm protecting the rights of those who inherit from me. You're protecting the rights of those who inherit from you. And then lastly is life insurance. And we said here, if needed, because One thing that's very important is that not everyone needs life insurance. And one of the problems with life insurance is that at times people will be very unscrupulous on trying to sell you a policy that you don't need. And they'll try to give you, the Cadillac policy with the highest amounts because they make commission based on those highest amounts. And they'll say, in this first 6 months, you can change it if you want to. So if they try to sell you, right, this is a problem. You want to have people that will be honest with you and sincere in trying to tell you what you actually need or do not need. So I'm here to tell you, as a financial advisor, that if you want life insurance, it's an important part of a holistic financial plan. It's an important part of a holistic estate plan, but it is not the entirety of your estate plan or your financial plan. You should never be looking to insurance as your retirement. You should never be looking to insurance as the what's going to take care of your family after you die. It's going to take care of very specific things. And you want to work with people that can tell you what those specifics are and when you do or do not need a policy. It's one of the reasons why I am enamored with our brother Osama here, Jazallah khairan, because when I was looking for people to refer people to, Osama was one of the only people who was very upfront with people about what they needed or did not need, and never tried to sell people more than that was what was necessary. So when we talk about choosing a life insurance policy, there are three main questions that come up. Now, what is the default that you know about life insurance? What's the default answer to life? Is life insurance allowed in the community? What does everyone say? No. Haram. Ala tul. Haram. Right? The answer is a bit more nuanced. When you offer a policy for life insurance, are you actually insuring someone's life? If I take a life insurance policy, is that person, can they never die now? But I insured their life. Doesn't work that way. So I'm not insuring the life. What am I insuring? I'm insuring the value, the economic value of what that means if they pass. Lost salary, lost income, lost cash flows. One thing that's very important to remember, and I tell people this in the terms of estate planning as well as in the terms of divorce planning, because a lot of people make this mistake, especially about divorce and death. They say, oh, well, we lived a very good life while we were married, or before my husband died, or before my wife died. Now, that's going to continue. It's not going to continue, because you might be able to provide a very good quality of life because you have ongoing cash flows from continuous work. The moment you destroy that cash flow, you've destroyed your life. So many sisters sometimes are pushed by people in the community to demand divorce. Oh, your husband, he's super rich. He has an office and he has employees. Yeah, and he's paying them monthly based upon what those earnings are. As soon as that goes away, your lifestyle will go away. As soon as that ceases with the passing of someone, that will also cease. So let's talk about the permissibility or impermissibility of insurance. The first question we have to ask ourselves about these things is, how is the company structured? It can be a mutual company or a conventional insurance company. What does that mean? If all of us today, right, how many times do you guys here at IIOC, do you get people that like tow cars from the surrounding parking lots and streets? Does that ever happen? So what if everyone in this room today said, how many people do we have in here? What? 100 plus? So let's just say 100. Let's say everybody, 100 people in here, put $100 into a pot. How much money do we have now? How much? 10,000. So now we have $10,000. And we say, you know what? Because all of us are here at this event, we're all going to put in $100. And every time we have an event every month, if there's overflow and somebody's car gets towed, we're going to use from that pot of money to pay for those tickets. Why? Because we all have a vested interest in all of us being here together and learning. That's the idea of mutual insurance. We all pool our money together. And then if we have a mutual need that we all agree on should be covered, it's covered from that money. But what do you do with money that's just sitting there? Should you just leave it in cash? No, you'll invest it. So you invest it in things that are going to earn it money over time. And then those earnings come back into the pot and the pot grows. But the basis here is that no one single person or single group of people own that money. It's a collective right. وَتَعَاوَنُوا عَلَى الْبِرِّ وَالتَّقْوَى. And mutually assist each other in goodness and righteousness. So mutual insurance companies are based on the idea of mutuality, of shared risk and sharing in the covering of those risks. Conventional insurance companies are based upon the idea of selling the unbundled risk, meaning I, as an individual, I have certain risks in my life. I will pay you money every month that if one of those risks arise, you'll end up paying back that risk as the conventional insurance company. So everybody pools their money, it's invested, but then who does the upside of that investment go to? It goes to the shareholders of the company. It doesn't go back to the policyholders, right? So because of this, the majority of scholars have said that mutual insurance companies are permissible, while conventional joint share companies are impermissible. Why? Because in the first, there's ta'awun, there's mutuality, and in the second, there's akl amwal an-nas bil batil, people devouring wealth without right. So if a company is a mutual insurance company, then it's permissible. But then we need to look at how do they invest the insurance premium pool? Are they investing it in things which are ethical and permissible, or unethical and impermissible? So if you can find a mutual company with ethical investments, then you have to ask yourself on a personal level, do I have an insurable interest in the policy that I'm getting? Right? Do I have an insurable interest in the policy that I'm getting? Meaning that if I took out an insurance policy on Osama, then do I have an insurable interest in his life? No, absolutely not. Why not? What's the connection? We're friends, we're brothers, we do business. But if he passes away, I'll be sad, but I can't be like, my sadness means that I should get $10,000, right? That doesn't work like that. An insurable interest means that if I lose this person or thing, right, I'm going to incur some kind of economic loss. So, like, you know, if a man says, you know what, if I pass away, my family is going to have to pay off the home. Therefore, they're going to have an economic loss of perhaps the house. Therefore, I should have a policy that covers the cost of the house when I pass away. That way, my family doesn't have to give up the home, nor will they have to bear the brunt of that if they haven't been earning at that time. So I have an insurable interest in making sure that my family is covered at that time. So if you can find a mutual insurance company with an ethical investment policy and you have an insurable interest in that, then inshallah ta'ala, it's no problem. It's permissible for you to take that policy. And from here, I'm going to hand it off to Osama. We're going to take questions at the end, not now. I'm going to hand it off to Osama. He's now going to take over and talk about the insurance side of it and Social Security. And then we'll open the floor for questions, inshallah ta'ala, at the end. Jazakumullah khairan.
Assalamu alaikum wa rahmatullahi wa barakatuh. Alhamdulillah. It's always difficult to follow up Sheikh Joe Bradford, especially one, he's an amazing speaker, and mashallah, his knowledge is vast, and he has so much life and energy. And then I have to follow up with very, very boring subjects like Social Security and Medicare. So please bear with me, inshallah, as I try to make it as entertaining as possible for you, inshallah. Barakallah feek, Sheikhna. Jazakumullah khairan. So, as Sheikh was speaking in terms of how we try to figure out whether someone should be getting a life insurance policy or not, it's very important that for us to take a few things into consideration before we even begin the application process for a life insurance policy. So first and foremost, we have a questionnaire that we ask individuals to see if they should qualify for one. So such as how old you are you married, how many family members do you have, how much do you earn, and do you have any outstanding loans? From this conversation that we have with different people that are interested in life insurance, we get an idea of what range they should be looking for. So for example, usually if you go to somebody who offers life insurance, if they ask you, how much life insurance do you want? If you say 3 million, 5 million, 10 million, the normal life insurance agent would be, they would get excited because, as Sheikh Joe was saying, with the higher the premium, the more that the person can get commissions or anything like this. But for us, we take it very seriously at IKHLAS. And at IKHLAS, we didn't offer life insurance until we had our agreement with Sheikh Joe Bradford to join our team as the official Sharia compliance advisor, who assists us to ensure that the insurance policies, the companies and the policies are both Sharia compliant. And we've had many meetings with Sheikh Joe where we would give him different types of mutual companies. So he was up here saying, if you go with a mutual company or a nonprofit life and insurance company, that you could potentially, it could be Sharia compliant. But we have presented many mutual companies and nonprofit organizations that offer life insurance where we have vetted and dug deep into the company and their investments and their ethics. And he has come back to us and said that they're not Sharia compliant. So there's so much more work and effort that goes into ensure this, because at the end of the day, especially if we're going to get a policy to leave for our family, especially with a good chunk of money, we want to ensure that inshallah this is compliant with the Sharia, because we want to meet Allah subhanahu wa ta'ala inshallah in the most clean slate that we possibly can. So once we gather all of this information, we try to figure out what a good range for the individual is and the affordability. And after we figure that out, there's two types of life insurance policies that we have approved to be Sharia compliant. Nothing other than these two thus far, right? We're always studying and researching the different types of policies. Number one is a whole life insurance policy. A whole life insurance policy has a permanent death benefit, meaning if you purchase a whole life insurance policy, you will have it up to the age of 120, 121. So essentially, it's for your whole life. You pay that premium for the entirety of your lifetime. Now, with this, you can also have as much death benefit as you like. And it also, many of them have a saving component, as well as it can accumulate cash value. And after potentially 5 to 10 years of having a whole life policy, and it accumulates a certain amount of cash value, then you become eligible to even use that cash value to pay your premiums. Okay. And then also many people like life insurance policies for different types of tax breaks that they can get tax deferred on the growth of the policy. Also the dividends that are paid based off of the investments, they're tax free. But the one note that you have to figure out when it comes to whole life insurance, unfortunately, it's not something that I usually like to recommend to people, unless it's a specific circumstance. Not many people we recommend whole life policies for. Now, granted, people who sell life insurance, they love selling whole life policies because, again, to be upfront and transparent with you, the commissions that are paid for whole life policies are very, 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 very high. And because the premiums are significantly high. And you'll see that sometimes the monthly cost for a whole life insurance policy is almost as much as a mortgage. And the reason why the premiums for whole life policies are so high is because you're not just purchasing a death benefit, but you're also purchasing the fact that the insurance company will also be investing your money as well. So the investment is also being towards building that cash value and building it, which allows them to essentially give you that higher amount and to make it lifelong. Whereas with the term, I'll explain it after this. So we don't usually recommend combining your death benefits with an investment plan. So when we compare it to a term life policy, which you can get it for 10, 15, or 20, or a 30-year term, with a 10, 15, or 20-year, 30-year term, you know exactly whatever amount that you're applying for, be it 500,000, a million, or whatever it may be, you're getting it for the specific purpose that you're looking for, right? Say you're in your 30s or your 40s and your 50s. Say I'm 50 years old and I may be retiring after 15 years. I get a 15-term policy because I know I want to ensure that my family is protected if something were to happen to me during that time period, right? You're insuring, as Sheikh Joe was talking about, there's an insurable interest for your family to be covered specifically during these breadwinning years. So the purpose of purchasing the insurance policy is being fulfilled at its best capacity when it comes to a term life policy. And the reason why whole life policies are so much higher is because they're trying to figure your rates when you get into the age of 70 and 80 and so on and so forth. Because when you look at a term, even if you get a term life policy at the age of 50, if you get a 30-year term policy, which would expire at the age of 80, what's going to happen to you then? It's going to be significantly higher in premium because they're also figuring that they're going to be insuring you and covering you in your late 60s and your 70s as well. And at that moment, the insurance company knows there's a higher probability of death, right? So there's a greater chance for them to pay off the death benefit. So which causes the premium for that policy to go higher. This is why when it comes to term life, we recommend it when it comes to people in their 20s, 30s, 40s, 50s, and we try to find a time that actually covers your breadwinning years. And we ask, what's the purpose for this? Is it to cover debts? Do you have a mortgage? Do you have loans? To ensure that when you pass away, that as Sheikh Joe was talking about, that you don't have to put your family in a situation, as we've seen in many masajid, where you have people coming up after Jum'ah prayer or making announcements, creating GoFundMes and all of these things where your family has to be in a position to ask, right? To ask others. Whereas here you can, inshallah, ensure the protection, the financial protection for your family in that circumstance. The monthly cost for a term life policy, when you study the fact and you're getting it for a specific time period in your breadwinning years, you will notice that the price difference is significantly lower, right? It's not even 1/3 of the cost of what a whole life insurance policy would cost. So it becomes much more affordable. And then some people may think with a whole life policy, if I purchase it, well, maybe after 5, 10 plus years, then it could potentially even get to a point where it's paying for itself. But the unfortunate thing here is we also don't know how much income we're going to necessarily be earning, whether we're working or even if we have our own businesses. Are we going to go through any financial difficulties? With a term life policy, the premium is much less. It could be anywhere between $40 to $200 a month, potentially sometimes a little bit higher. But with whole life policies, you can get up to the thousands, $2,000 a month, right? Depending on how much life insurance you're applying for. So the affordability of a term life policy and your ability to maintain its payments for the length of the term is much more likely than with a whole life policy. Because with the whole life policy, the moment you stop paying for it and there isn't even enough cash value for that cash value to be able to cover the cost, you lose the policy altogether. So all of those years, those 2 years, 3 years, 5 years, etc., that you were paying into it, you have nothing anymore, right? So what we usually recommend is to take a term life policy, pay a lesser premium, know that you're protecting your family, inshallah, specifically in those breadwinning years. And then that difference, let's say you can afford a whole life policy. Take that difference, find a good, mashallah, investor, Muslim investor that can, take care of your finances and your wealth, or even if you're investment savvy yourself, and do your own investments. Because if you go through a financial crisis, what can you do with your investments? You can just call your investor, or you can, if you're doing your investments yourself, you can pause it for 6 months to a year, or whatever it may be, but you can't pause payments on a whole life policy. So with a term life policy, you're not putting as much financial strain on yourself than that you would do with a whole life. Now, there are certain circumstances where a whole life could be beneficial for somebody. But again, usually all of these things is more by case scenario. But generally speaking, for most people's goals, from what we've seen, is a term life policy does the job. It does not build up cash value. You purchase it for whatever term that you have. And then at the end of the term, it's done. right? So say, for example, you're 30 years old, you get a 30-year term policy. At the age of 60, inshallah, you've prepared yourself, retirement, all of that. At that point, you have different options that you can do when the term life policy expires. Number one, you can renew it for another term, right? You can apply for another term, another 10-year policy or whatever, or go for a final expense plan, as we will talk, or to even convert the policy, or allow the policy to terminate on its own. You feel like at that time, at retirement, or however old you may be, that's my children have grown old, are at a certain age where they can take care of themselves. I have enough money set aside for my spouse and all of that. Everything is fine. Then I don't need this coverage anymore. Right? So many times we've even had people contact us and say, you know what, I'm trying to build generational wealth. Well, in Islam, we know that Allah subhanahu wa ta'ala is Ar-Razzaq. There's really nothing you can do to try to build generational wealth. Even if you have your own business and it's a multi-million, billion-dollar business, after you pass away, you think that you're leaving this business for your children, Allah subhanahu wa ta'ala can take it away. So our goal here is to just make sure that we can protect our family in a situation where they're not left asking other people, that we leave them in a circumstance where they have enough to deal with the sadness of losing someone dear and special in their life. The last thing that they need to worry about is losing a house, losing a car, not knowing how to take care of their children or anything like that. So we even ask, do your kids go to Islamic school? How old is your youngest child? So that we can see how old until the child becomes 20, 21, 23 to be able to take care of themselves. All of these types of questions to essentially figure out the range of what's an appropriate amount for the individuals to apply for. Then you have final expense plans. This is something that is ideal for Muslim seniors that are at the age of 60 plus. And it's specifically here when we're talking about the high prices of funeral costs here in California. With a final expense plan, it's like a whole life policy, right? You can get anywhere between 5 to 30 to honestly even up to $50,000 in a death benefit. The premiums are lower, and the nice thing about these plans is there's no medical examination. Whereas with a term life policy and a whole life policy, you do have to go through a physical, and the insurance company does underwriting to figure out how much your monthly amount is going to be. So if anybody has any questions on, I'm 25 years old, I'm 35 years old, I'm 40 years old, how much would it be for a $500,000 life policy? We don't know, because there's a lot of things that we have to figure out. Your age, your height, your weight, your medical history, and all of these things. And then on top of that, the underwriters are going to send out a nurse to do some blood work and different medical examinations as well. And it's very important to figure, if you don't have anything set aside to cover your janazah costs, these are the general costs of what a janazah can be. Around the US. Now, as you see here highlighted in bold at the bottom, this differs from state to state. We do this presentation in different states around the US, but you heard it from Sheikh Joe himself in speaking with Sheikh Farhan Zubairi, that they're on average about $20,000 a month. $20,000 per janazah. And you know, we even know funeral directors here in Southern California that have told us we're running out of spaces. And they're even looking for fatwa to see if they can even bury some people above others because there's no spaces. And in order to keep the costs down. So the situation here in California is very difficult, right? So you're looking at a range between $15,000 to $20,000 plus, and that amount is going to increase higher. Whereas if you get a final expense plan, you're going to, inshallah, pay a specific amount monthly, and that price does not change. The younger you are, closer to 60, of course, that you get it, and the better health that you have, that will ensure a lower price, and that price would be locked in for life, that you will never have like a rate increase. As you know, certain insurance policies increase their rates every single year, but when you sign up for a final expense plan, it does not. So generally speaking, these are the types of policies that we have approved with Sheikh Joe Bradford and at IKHLAS. And I also want to make note that you all, mashallah, have a great brother here in the Southern California community. You have also Brother Javad with a RAIN agency who is certified and works with us with IKHLAS. And he's a great brother. If you want to see someone here local to you to help you find a Sharia compliant life insurance policy, he's a great brother. You can either go to him, see him in person, or you can also contact us, inshallah. So now let's dive into the fun subject of Social Security. Bismillah. How do you qualify for Social Security benefits? So you must acquire 40 credits of Social Security in the span of your working years, right? So essentially, you can get up to 4 credits per year. 4 credits per year, and each quarter in the year of 2024, you have to earn at least $1,730 in order to qualify for 1 credit. So if you're going to earn that amount, and this amount increases every single year, if you have earned 4 credits every year, which would amount to up to 10 years working here in the US, then you will qualify for a Social Security benefit. It doesn't mean that you're going to qualify for a high Social Security benefit, but you're going to qualify for a specific Social Security benefit, and we'll speak about how much that range is going to be. The most important thing that you can do, right, in order to try to figure out what your amount is and how to prepare for your retirement when it comes to your Social Security, I'll say put this website aside, the estimator part. Just go to ssa.gov, the Social Security Administration website. If you go to the Social Security Administration website, you can create a login for yourself, and you put in your Social Security number, the government website, and it will have pretty much a program on their website where it tells you, if I retire at 65, at 67, at 68, how much will my estimated monthly Social Security benefit is going to be, right? So this is a great way, especially if you're in your 50s or early 60s and you have not done this yet, and you're getting around the age where you can collect your Social Security. This is a great way for you to prepare to figure out how much Social Security benefits that you could acquire. When are you first eligible to collect your Social Security benefits? Generally, if you're collecting on yourself, at the age of 62. If you collect your Social Security benefits at the age of 62, you will receive it, but at a reduced amount. Your benefit will be reduced, and we'll talk about how much. If you wait until your full retirement age, you will get your full Social Security benefit. If you wait until the age of 70, any time you delay between the full retirement age and the age of 70, you're looking at an increase in your Social Security benefit of 8% per year, okay? So at the age of 70, it's not going to grow beyond that. This is a chart that shows you what your full retirement age is going to be, right? So essentially, a few years ago, several years ago now, the government changed the collection, the full retirement age from the age of 65, bumped it up to age 66, and then added 2 months to that for every year up until people that were born in 1960 or later, to make the full retirement age 67. And why did the government do this? Because the bottom line is the Social Security Administration is running out of money, right? And there's even studies that show by the year 2034 that they're only going to have enough money to pay 60% or 50% of what your benefit could be. So you're going to possibly see that there's going to be a lot of changes in Social Security happening, or else it's the Social Security fund is literally going to run out and it won't be available to anybody. So this is something that is going to be very crucial, especially with the government, to try to figure it out. But for people right now that are born in this age range that are not impacted by this in the next decade or so, this is your full retirement age, and this is a very important age and time frame for you to be familiar with, to know how to navigate through your through receiving your Social Security benefits. So if you collect at the age of 62, which is your earliest age of eligibility, you can you can receive it, but your benefit will be reduced by anywhere between 25 to 30%. And this is a permanent reduction to your collection. A permanent reduction to your collection. Okay? However, if you wait until your full retirement age, you get your full amount. So how do we figure out between the 25 to the 30%? Obviously, if you're collecting at age 62, it's going to be reduced significantly more than if you're collecting at 64 or 65. And then, as we said, if you're in a situation where you don't need to collect your Social Security check, you have good amount of funds, you're still working, so on and so forth, that money is not going to make a difference in your life, that you might even want to invest it or something like that, you have nothing to do with it. What you can do is you can just leave it and let it build, because it has a guaranteed 8% increase every year until the age of 70. Now, there's another argument where you see what's the how long do people usually live for, right? Because if I start collecting at age 62, even if it's a reduced amount, at the end of the day, you don't know when you're going to pass away, right? So sometimes you want to figure out, well, if my spouse is closer to my age, maybe I'll just collect it right away. But if my spouse is significantly younger, then I can also increase her Social Security amount or his Social Security amount by waiting, and because they can collect a survivor benefit, which we're going to speak about. So what is the average Social Security benefit in the US? The average Social Security beneficiary in the US brings home around $1,907 a month. Now you may ask yourself a question, well, that's not how much I bring, or that's not how much I expect. Some people may collect $500, $600, $700 a month. The maximum that people are receiving this year in 2024 is $4,873, which is a decent amount. So how do I know? How can I collect the maximum? How can I collect the average? Or how come I'm so much less? So what they do is they take your average income from a span of 35 years. So let's say, for example, some of you came to the US and but mashallah, you worked as a doctor and you were making hundreds of thousands of dollars every year, but you only worked 10 or 15 years in the US. But you were making, you were reaching the maximum of the earning amount. So the maximum earning amount is $168,000 per year, and this amount goes up. So if you make the maximum of a minimum of 168,000, and you do that for the entire amount of the 35 years, then yes, you'll qualify for that full amount that we were talking about, that 4,800 that people are receiving is their maximum. But if you work for only 10 to 15 years, what is the government going to do with the remaining years? They're going to put a zero as your income. So if they put a zero as your income, oftentimes it doesn't really matter how much you're earning. It's bringing your average down significantly. Right? So the more years you work in the US and the more you earn impacts how high your Social Security benefit is. So if you feel like you've worked in the US for a long time, but you're not getting a certain amount, this is how they calculate your Social Security benefits. So this is something to try to figure out, you know, when people are usually collecting their Social Security checks. As you see, people are often collecting it earlier. They're not usually waiting. And because life expectancy now is usually in mid-70s, sometimes people are living until their 80s. So people want to figure out, well, what's my break-even point? If I wait until I collect at my full retirement age, how long do I have to live until I get my break-even point and I make up the difference if I had collected from the age of 62, right? So some people say, you know what? I don't know when it's going to happen. Let me just collect at the age of 62. But something that people don't recognize is that if you were to collect early, you're also potentially impacting the Social Security benefit amount of what your spouse could be collecting, especially if your spouse did not work or your spouse earned so much less than you that their Social Security amount is going to be significantly less. Because whenever you start collecting, your spouse is going to collect. If they're going to collect off of you, they're going to collect a percentage of whatever your amount was. So if you were to delay collecting your Social Security amount, you're also increasing the amount that your spouse could be collecting. So if a spouse never worked, but you worked yourself, and you're wondering if they're going to qualify for Medicare and Social Security, yes, they can qualify. They can qualify for up to 50% of your amount if they wait for their retirement age. So likewise, if they collect earlier at the age of 62, they're going to get a lesser amount, less than 50%, if they collect before their full retirement age. So essentially, if they collect anywhere between the age of 62 and their full retirement age, the spouse from the breadwinning spouse, it could be a 35 to 49% of their benefit. If they wait until their full benefit, full retirement age, then they will collect the full 50%. Now, this is the one where you have to take the most consideration on when you want to collect it, especially if there is an age difference, a significant age difference between you and your spouse. Because again, the longer you wait, the higher the Social Security check could be. Because you can collect Social Security, a Social Security check, survivor Social Security check, at as early as the age of 60 years old. As early as the age of 60 years old. So you don't even have to wait for age 62. If you collect it at 60, you can collect up to 71.5% of your spouse who had passed away, their Social Security benefit. If they wait until their full retirement age, they will collect the full 100%. So then you would think that if they waited until the age of 70, especially if they did not need the money, and they just allowed the money the Social Security check to increase, then your spouse could be collecting more than double than whatever they were collecting. So these are some things that you have to consider. Of course, we always say that if you need the money, no matter what age you are, we obviously advise you to collect your Social Security check, regardless of the circumstance. But at the end of the day, this is something why you should create that account on SSA.gov to have an idea of how much you could be earning, so that you can better plan with these things. And you can talk to different advisors on to help you whether you should collect your Social Security check earlier or not. Something very important to consider before collecting your Social Security check is if you are working, if you are earning income. If you are working anywhere between the age of 62 to your full retirement age, if you earn beyond $22,000, the government will ask for $1 back for every $2 you earn beyond that. Now, they're not figuring in your spouse's income here. This is your individual. Even if you file joint, they're only figuring your individual income here, even if you file joint. So if your spouse makes $100,000 and you're making less than $22,000, then you should be fine to collect without a penalty. Okay? However, when you enter the year where you become your full retirement age, you can earn up to $59,000 a year. And then if you earn anything beyond that, then they're going to ask for $1 back for every $3 you earn greater than that amount. After your full retirement age, whatever it may be, 66 and 2 months, 66 and 8 months, or the age of 67, there's no limit to how much you can earn. You can make millions of dollars a year, and they're not going to penalize your Social Security check at that point. Every year, Social Security has a cost of living adjustment where it raises your Social Security check amount. And this year in 2024, it was 3.2%. Honestly, it's nothing significant because they're also raising the cost of Medicare, which pretty much makes up for whatever adjustment they're giving you, sadly. And then considering there's a lot of different collection strategies when it comes to Social Security. If we were to talk about all of them, you guys would probably have to invite me for a whole week seminar. But it's also even more boring than what I'm trying to cover here, inshallah. So this is something that is more case-by-case scenario. And if you need any assistance, that's something that you can talk to your local financial advisor, or you can feel free to contact us and we'll do our best to assist you. So now we jump into Medicare benefits. So Medicare is made, so you have the A, B, C, and D of Medicare. So we're going to go over all of these things to help you understand the whole alphabet of Medicare coverage. the most important thing that you need to get a grasp of is understanding what original Medicare is. Original Medicare is your red, white, and blue card that says Medicare coverage. It says your name on it. It has your Medicare claim number, and then it says your Medicare Part A and Part B effective date. This is your original Medicare coverage. Your Medicare, your Medicare Part A, is going to be your inpatient care, your hospital coverage. Your Medicare Part B is going to be your outpatient care. So we're going to go over what your original Medicare does for you. And then after that, we're going to see what options you have beyond the Medicare. Because original Medicare, that Medicare card that you get in the mail, it doesn't give you full coverage. You need additional coverage to assist you with that. Medicare Part A. Medicare Part A can cost anywhere between $278 and $506 a month. Now, if you qualified for Social Security benefits, you also qualify for Medicare benefits. And it would make your Medicare Part A cost at zero, right? If you have 40 credits, right, then you qualify for Social Security benefits and you qualify for receiving your Medicare Part A for free. If you see that your Medicare Part A has a premium to it, that means you did not meet the 40 credits. So usually Medicare Part A comes free to seniors at the age of 65. As we said, Medicare Part A is your hospitalization coverage. So how does Medicare cover you? Well, per admission to the hospital, every time you get admitted into the hospital, you'll have a $1,632 deductible. And this will cover you for up to 60 days, 60 days of coverage. So if you leave and you go back months later or whatever for a different reason, you're going to have to pay this deductible per admission to the hospital, $1,632, and then Medicare covers the rest. Now, if you're in a circumstance where you're in the hospital for 61 to 90 days, you're going to have to pay a daily copay of $408. This is just Medicare coverage, right? Even you're getting it for free, you're still having to pay $408 a day. If you're in the hospital even longer, 91 to 150 days, you have to pay $816 a day during that time period. And anything beyond that, Medicare covers nothing. You're left on your own. So clearly, we need something to help us cover the hospitalization costs that Medicare does not cover. Now, to be honest with you, hospitals don't want to keep you in the hospital beyond 5 days or 10 days or 15 days. They're trying to get you out as soon as possible. So the number one thing that you would be concerned about is that $1,600 deductible per admission, right? The rest is more unlikely, but even then, if you're in a circumstance where that would be the case, that is definitely a lot of money. Medicare also covers your skilled nursing facility care. So if you were in the hospital, admitted inpatient for 3 nights, then Medicare will cover the first 20 days at a skilled nursing facility for recovery care. You're not ready to go back home and take care of yourself. You need to be in the care of nurses. If you're in the skilled nursing facility for 21 to 100 days, then you have a $204 daily copay, $200 daily copay at the skilled nursing facility. They will not cover anything beyond 100 days. So essentially, that is the basic knowledge that you need to know about how Medicare Part A covers you in terms of hospitalization. The number one thing you need to concern yourself with is that $1,600 per admission deductible to the hospital. Then you have Medicare Part B. Okay, Medicare Part A generally is going to be free for everybody. Medicare Part B will always cost you a specific amount. For most people, it's going to cost them $174 a month and 70 cents. This will be automatically deducted from your Social Security check. If you don't receive Social Security check, they're going to bill you quarterly for this. Okay. Now, if you're working and you're earning income, the more you earn, the Medicare Part B could cost even greater for you. It could cost up to $244 a month, even up to $594 a month, depending on your earned income. So, for example, if you make over $400,000, $419,000 a year, you could even pay up to $594 a month on your Medicare Part B. But generally speaking, most people pay $174. So, as we said, Medicare Part B is your outpatient care, anything that's not being admitted into the hospital.
So with this, you're talking about doctor office visits, specialists, may Allah protect us, cancer treatments, outpatient surgeries, anything that's emergency room, ambulance, anything that's not being actually admitted into the hospital. With this, you have an annual deductible of $240, which is probably the smallest deductible you've ever seen. But once you pay that $240, then Medicare will cover 80% of all your Medicare charges, and you're left alone to pay the remaining 20%. Now, the problem that we have here is Medicare has no maximum out of pocket, meaning it's unlimited risk. So if you've had a group policy through your employer or an Obamacare plan through Covered California, right? There's always a maximum out of pocket, even if it might be high, 5,000, 6,000, 10,000. At least you know there's a maximum amount that once you pay it, you get 100% coverage. However, unfortunately, with Medicare, there's no maximum out of pocket. You have to pay 20% unlimited, 20% of every doctor office visit, specialists. And if you get cancer, 20% of every chemotherapy, of every checkup, every x-ray, every MRI, every outpatient surgery, 20% without a cap. So if you have an outpatient surgery, for example, that's $100,000, you're paying 20% of that. So the scariest part about original Medicare benefits is the fact that you have to pay 20% that's open with no maximum out of pocket. These are some things that Medicare does not cover, which is most dental care, eye examinations, hearing exams, and hearing aids, and so on and so forth. There's other different types of plans that people can sign up for to help them cover what it does not cover. So when are you eligible for Medicare? You're eligible for Medicare at the age of 65. Your effective date, the start of your Medicare coverage will be the first day of your birth month when you turn 65. So for example, if you turn 65 September 20th, your effective date will be September 1st. Now you have what's called the initial enrollment period into Medicare. You have to apply for your Medicare Part B, because usually Medicare Part A is going to be automatic, especially if you've had the 40 credits. And especially if you were already collecting your Social Security benefits, even your Medicare Part A and Part B, Social Security might already sign you up for it automatically. But what you have to do is you have to ensure that you are signed up for the Medicare Part B. Your enrollment period begins 3 months before your birth month and 3 months after your birth month. And if you wait beyond this and you don't sign up for your Medicare Part B during this time, then you're going to have to wait until the Medicare open enrollment period, and you're going to potentially delay you having Medicare benefits for several months, if not a year, right? So this is very, very important. When you're getting close to the age of 65, to the birth month, you need to begin exploring your options, going to the Social Security website, and then enrolling into your Medicare Part B benefits. Now, we went over what original Medicare covers. Original Medicare is Part A and Part B. Part A is your hospital insurance, inpatient care. Part B is your outpatient care, anything that's outside of the hospital. As we said, the most significant things that we need to worry about original Medicare benefits is the Part A inpatient deductible that you have to pay per admission, which is about $1,600, and the fact that you have to pay 20% of all outpatient services, unlimited without a maximum out of pocket. So we need to find a solution to this. So you have two options. Unfortunately, there's no other options when it comes to Medicare. And there's no reason not to pick one of these options. Option number one is to keep Medicare as your primary insurer and take a Medicare supplement plan to supplement what Medicare Part A and Part B does not cover, which basically keeps Medicare as your primary coverage. Therefore, there's no network. You know how with your insurance plans, you have HMOs, PPOs, you have to make sure doctors are in networks, hospitals are in networks. When Medicare is your primary, wherever Medicare is accepted, you are accepted. So your coverage will be the same here in California as it would be anywhere in the US as long as Medicare is accepted. So you take a secondary insurance plan through a private insurance company to cover and supplement what Medicare does not cover. For example, to cover that $1,600 deductible and to cover that 20% of Part B charges that Medicare does not cover. Medicare has supplemental plans. Every single Medicare supplement plan is standardized by the government, which means if a private insurance company wants to offer any of these plans to a Medicare beneficiary, the private insurance company must give you the benefits as you see on this table. They cannot give you more benefits or less. So no insurance company can say we're going to give you better coverage than another company. The only difference between Medicare supplement plan A, B, and C is the cost of that the company is charging for that specific plan. So that is the only difference. So when you want to compare the different plans, the benefits are the same. Only difference is going to be the company. Now, the most popular plan that most people take is Medicare Supplement Plan G. Medicare Supplement Plan G is the most comprehensive plan and the plan that gives you the most value for how much you're spending. So we looked at the same charts when we were going over Medicare Part A coverages. And as you see here, there's a check mark under each benefit amount that you would have to pay out of your pocket that Medicare does not cover, that Medicare Supplement Plan G covers. So that $1,632 deductible per admission that you would have to pay every time you go to the hospital, well, Medicare Supplement Plan G covers it no matter what company you have it through. Doesn't matter what company it is. And it will cover the $408 daily copay and the $816 daily copay. And it will even cover beyond that if you're in the hospital. So if you sign up for a Medicare Supplement Plan G plan, you are guaranteeing for yourself that if you're ever admitted in the hospital, you will never, ever get a medical bill. Likewise, when it comes to skilled nursing facility care, recovery facility care. The first 20 days are covered by Medicare anyway. That's why Plan G doesn't cover it. But what we need coverage for is the 21 to 100 days. And Medicare Supplement Plan G would cover that. Beyond that, you're looking at long-term care coverage. Medicare nor the supplement plan will give you coverage with that. Now we go to Medicare Part B. So Medicare Part B was all the outpatient care. So the only thing that Plan G does not cover is that annual deductible of $240. And again, that's probably the smallest deductible you've ever seen. Once you pay that just once a year, if you paid at the beginning of the year in January, then after that, Medicare Supplement Plan G will pay the 20% unlimited. So no matter what you do, how many times you go to the doctor, how many outpatient surgeries you have, whatever specialist visit, cancer treatments, whatever it may be, MRIs, ambulance, emergency room, it will be covered at 100% by the Medicare Supplement Plan G. So essentially, with the Medicare Supplement Plan G, whatever the monthly cost may be, $100, $120, $130 a month, depending on how old you are and what area you live in, you're guaranteeing that all I need to do is I need to budget that monthly premium for my medical expenses. I'm not going to have any surprises. The only out-of-pocket expense I'm going to have for medical or hospital is going to be the $240 annual deductible, which is just one time, and my monthly premium. And I know I can go to any doctor I want and everything will be covered. So in that case, it's the safest option. Now, it doesn't cover prescriptions if you take a Medicare Supplement Plan G. When is Maghrib prayer? 8 o'clock? 10 minutes? Okay. I'll try to wrap up quickly, inshallah. So if you have a Medicare supplement plan, it doesn't cover prescription drugs. So what you need is a Medicare Part D plan. So with the Medicare Part D plan, D's for drugs. With this, essentially, the easiest thing to do is you can go to Medicare's website, medicare.gov. You input your prescriptions, and it has a software, a program that automatically gives you all the different options for Medicare Part D prescription drug plans that are available, that they will find a non-biased solution to cover your prescriptions that are a plan that is specifically catered to the list of your prescriptions that you have. So if you take a Medicare supplement plan and a Medicare plan Part D plan, the prescription plans, some of them are even up to $0 a month, $10 a month. So you're looking around the budget of between $100, $150 some dollars a month to get all of that coverage. Okay. So solution number one to what Medicare Part A and Part B does not cover is to take a Medicare supplement plan and a Medicare Part D prescription plan. Solution number 2 is to look into a Medicare Advantage plan, or also known as Medicare Part C. This will give you coverage for Part A, which is hospital, Part B, which is medical, and Part D, which is prescription. All of that making Medicare Part C. These plans can be as low as $0 a month, 100% free. And many people ask the question, how can it be free? The reason why is because Medicare essentially is no longer responsible for you anymore. Medicare, the federal government, pays the private insurance company anywhere between $10,000 to $15,000 a year, so that the private insurance company now is responsible for that Medicare beneficiary. So Medicare is no longer going to cover anything for you. Now that private insurance company that's giving you coverage is going to give you benefits. So when the private insurance company is the primary, now it's very important to take a plan that has a good network to make sure that your doctors never ever sign up for a Medicare Advantage plan that you haven't checked their benefits, to make sure your doctors are in network or your local hospitals are in network. We've seen many times people been told that this Advantage plan is $0 a month and it will cover everything for you, all your doctors, all your hospitals, only for people to find out later that their hospitals and their doctors are not covered in network, and even their prescription drugs are not in network. So this is very important when you work with someone who can assist you to find the best options for this. Now, the worst part about Medicare Advantage plans is their high hospital copays. Now, with their high hospital copays can range anywhere between $200 to $400 on a daily copay. So with this, there's another solution where you can take an additional plan with the Medicare Advantage plan, which could be $0 a month, which would be for an additional $25, $30 some dollars a month, which would cover your hospitalization costs, which many people do to assist them with the high hospital copays. So something that is very important when you're on Medicare is to know when the annual enrollment period is. So we talked about people who will take either a Medicare supplement plan, a Part D plan, or an Advantage plan. Well, you also have an opportunity each and every single year between October 15th and December 7th to review your options. And during this time, what you can do is, if you have a Medicare Advantage plan, you can switch to another Advantage plan if it didn't work out for you, or if that Advantage plan was just simply not good, or that Advantage plan could be not giving coverage in your area anymore. Because with the Medicare Advantage plans, even if you really like the benefits for the specific year that you're in, the plan is only contracted for 1 year. So the benefits could completely be different the following year. So you have an opportunity to review this to ensure that it's still a good option for you for the following year. So during that enrollment period, you can review your Advantage plan. Or if you don't have an Advantage plan, if you have a Medicare supplement plan with a prescription plan, this is a chance for you to review your Advantage plan and your prescription plan. I know this might be a little bit confusing. October 15th to December 7th of every year, you can review your Medicare Advantage plan and your Part D prescription plan, review the benefits to make sure that it's still the best coverage for you for the following year. Your Medicare supplement plan, you can switch throughout the year, anytime you have an opportunity to do so. Now, what if you don't retire at the age of 65 and you don't want your Medicare Part B benefits? You can defer your Medicare Part B benefits for when you do retire. At that moment, you will have a special enrollment period where you can enroll into Medicare Part B. You'll have 60 days to do so. So when you know you're going to retire, you have to make sure that you enroll to Medicare Part B within 60 days of your retirement. They give you 60 days after your retirement date to give you an opportunity to enroll. If you don't enroll into Medicare Part B, you will be penalized by the government. And again, you have to wait several months until you have to enroll again. Now, many people could be eligible for Medicare and Medicaid at the same time. And they may think that I already have full benefits, everything is covered, I don't need anything beyond that. Where there are some Medicare Advantage plans that work well with Medicare and Medicaid, that you'll maintain the full coverage, but they'll also give you additional benefits such as transportation, vision coverage, dental, hearing, and so on and so forth. So this is something that you can get at an additional cost. So what are the costs of Medicare Advantage plans or Medicare dual plans with Medicaid? It could be potentially 0. So that is about it, inshallah. I don't know if you guys want to take questions now. I know Maghrib is very soon. If Sheikh Joe also. Jazakumullah khairan.
Bismillah. Only? Yes. I'll repeat the question. Just let me complete this. If a person passes away and only leaves behind daughters, no other relatives, the daughters split all of it equally. That's it. If there's no other relatives that would inherit, then no one else gets money. Essentially, there are certain people that if they remain after your death, then they would preclude anyone else from inheriting. But if in the case where you leave behind relatives who inherit and no one else who would inherit is alive, then they split the money between them. Yeah. Yes, please. Yes. Yes. Okay, so this is a good question. If you are on the title of property as joint property in the state of California, but only one person is the person who's effectively purchasing that property through a mortgage or anything else, how will that property be divided at the time of death? Property is imparted to someone else through 3 means. Either through bequest, like leaving it as a charitable gift after death, through a gift during the lifetime, or through sale. If you leave no other discerning information about how that property is to be treated, it will be treated per title, meaning that it will be 50% of the husband's, 50% of the wife's. Which means that if you do not want to treat it that way, because maybe state law was what mandated you to put the other person's name on the property, then you need to do one of 2 things, or if you do both of them, then it would be even better. Inshallah, we're getting a light show today. Number 1, the spouse who is relinquishing their right to that property per title should sign something called a quit claim deed. A quit claim deed says, what's your name? Imtiaz. So Joe and Imtiaz own a property together 50%, 50-50. But let's just say, for example, that we also had a business together and that I took money from you for that business. And I said, you know what, Imtiaz, just consider the property yours. What you want to do is you want to have me sign a quit claim deed, which is me saying, I, Joe Bradford, recognize that my name is on the legal paperwork, but I relinquish all legal right to the property. If you have that, then that property is 100% the person's who is in the quit claim deed. Additionally, for married couples, you can have a marital property agreement, which will say, as husband and wife, this is the property that is joint and shared. This is the property that is excluded from that. That way, at the time of death, every property will be dealt with accordingly. But if you don't do one of those 2 things or both of them, then it will be treated as 50% property rights for each person. Say that again, please. Yeah, the marital property agreement can be signed after the purchase of the home. It's not a problem. And a quit claim deed can be signed at any time. Yeah. Okay, he's going to have the mic, so give it to this brother here.
Hello. I have a a life insurance policy with State Farm tethered to a car insurance policy.
Okay.
There is a premium of about $260.
Mhm.
It brought my rate down after an accident. So I also have a loan with a small amount of RIVA, 5%, for like $5,000 that I'm getting through that insurance company. So my question is, as I'm transitioning my IRA to halal stocks, I bought Amana, and how do I create a liquid income outside of my job? Like, what is a good halal investment that I can put in to grow income that will allow me to pay off that riba?
Yeah. So, the one way that you will make the most money and that you will be able to create liquid income is through whatever you're doing as a job right now. My advice is to, if you have the ability to improve the skills that you currently have and work more in that, essentially increase your income through what you're doing now, that will be the fastest way to do that. That might mean working more. That might be charging more for what you're doing. It might mean moving a job. Secondly, would be to look for, side hustles or side jobs that would not take away from what you're primarily doing, but would start to create passive income. And then all of that extra income, you can direct it towards investments like dividend paying stocks that will pay out monthly or quarterly or yearly, and then reinvest all of that so that eventually that money will kind of snowball into something that will help pay off your debts.
So I used to build electrical panels till my father retired, like a PLC panel until my father retired. But I hurt my back, so now I'm driving Uber. After 2,000 fares, Uber will pay 100% tuition to ASU University for a degree. So ultimately, I'm trying to get a religious studies degree because I was a monk before that.
Okay.
So is there any way, any field of work in Islam that I can transition into that's connected to this religious studies degree that I can?
Yes. Becoming a federal chaplain. Federal chaplain. Chaplaincy is an area which there's dire need for educated Muslims in, that pays very well. And that one of my friends he was previously a chaplain for both state as well as federal prisons. And he was also a local imam. And he used to say he would come to the masjid and no one would attend the classes, no one would study, no one would, discuss the information. But every time he went to the prison, people, mashallah, were on top of it, reading, discussing, wanting to learn. So he said, every time I would go to the masjid, I would tell you guys need to go to jail because you're not studying. But all of the brothers that I know that are working in chaplaincy, and I actually just met a few in Chicago recently who are doing their degree with Bayan College here, have continued to say that the need in prisons is real, both state and federal, for educated Muslims who will be able to give pastoral care to other Muslims that are incarcerated as well as non-Muslims. So I think that's a very steady income that not only allows you to earn by doing something in the religious studies field, but also gives you extra time to be able to read and educate yourself and even do a side hustle. Alhamdulillah, that's okay. Yeah. The most important thing about being a revert, about knowing Islam, is teaching people what you know and having the humility to say, I don't know. As many scholars have said, I don't know is half of all knowledge. So as long as someone comes to you, they might not be looking for a fatwa from you. They just need someone to listen to and then to give them sincere advice. And every believer can be able to do that. It's upon us to say, okay, this is the advice to the extent that I know, and whatever I don't know, I will go and learn and bring back to you. And inshallah, Allah will put barakah and blessings in that for you. Alhamdulillah. So we're going to take from the sisters and then we'll come back to this side. Yes. She's got the microphone. She's like, don't preempt me. Go ahead.
Okay, assalamu alaikum.
Assalamu.
Okay, I had two questions. So the first one was, correct me if I'm wrong, but in the beginning you had mentioned that credit cards were forgiven. Credit card debt was forgiven.
Yes.
does that include student debt as well? Like if you,
No, student loan debt is never forgiven.
so like, I think you had mentioned a hadith earlier about like, oh, the body has cooled down now. Like
Yeah.
obviously like, Samahani, but like whatever, if I pass away and I have student debt,
Yeah.
like that's still on me. Like someone has to pay it off.
Yeah. So they're going to come after your estate. They're going to say any money that she leaves behind, we're going to come and take that. And then whatever's not left after that, they're not going to try and take it from your family, but they're certainly not going to forgive it.
Okay, so I think I can understand in terms of like a legal perspective, like if I were to have dependents. I mean, I don't. I'm talking more so like an Islamic perspective, like your hasanat or whatever.
Yeah.
Okay, so you're still responsible for
You're
that.
still responsible. Yeah. I should try to pay that debt down as quickly as possible.
Okay, and then my second question.
Although I want to recognize that student debt is a very large problem, that it's almost impossible to get an education, a basic education, much less an advanced degree. And so there's a necessity at times to use student loans in order to get that education. However, along with education, we need delayed gratification, which means, I know of a brother in my city who was in medical school, and he took loans to be able to go to medical school. And his wife was a school teacher. She was making like $40,000. So he lived completely off of her salary. And for 2.5 years, everything that he made as a physician went to pay down that debt. And they were able to do it. But you have to be convinced that it's important for you not to have that debt. And so the same thing goes with student loans as well. Also, I want to encourage anybody that has student debt to look into the carve-outs from the Jobs Act, which allow you, the Jobs Act, the carve-outs, basically the exceptions or the programs that are out there, that if you work for a nonprofit organization, you can apply for loan forgiveness for student loan debt. And I actually know several people who have been able to do that, who work both in the medical field as well as in charity and social services.
Okay, that makes
Yes.
sense. And then just really quick, like sidebar, because you had brought it up. So if we're talking about like priorities in Islam, like because my student debt is in forbearance because I'm doing my master's right now.
Mhm.
So do I have to pay off my debt first before I do things like Umrah and Hajj and like investments and stuff, even if there's no interest accruing on that student debt?
This is an excellent question, and I'm very glad that you asked it. The only type of debt that prevents a person from investing or going to Umrah or going for Hajj or doing anything in the normal course of their life is debt which is currently due and being demanded for payment. I'll give you an example. What's your name?
Aisha.
Aisha. So Aisha, let's just say that I borrowed $10,000 from you. Okay. And you came to me and you said, hey, remember when like a month ago we met? I say, yeah, I remember that. But first, before you ask me anything, I need you to say Mabruk. Say Mabruk.
Mabruk.
I'm going for Hajj this year. And then you're like, you owe me $10,000. How are you going for Hajj? It's my responsibility to pay you that $10,000 before I go for Hajj. So any debt that is currently due prevents you from doing those things. But if it's in forbearance or it's scheduled where I can make the monthly payments, then it's fine to do all of those things.
Okay. And then, sorry, my last question would be, is there like a document where you're allowed to speak on your parents' behalf, even if they're still of sound mind and body? Like, for example, I was trying to help my dad with his retirement. And even though like he's verbally giving permission for me to speak on his behalf, they wouldn't allow me to help him. They would only allow my mom because it's obviously his spouse.
Yeah.
But she's not always like readily available. And just with regards to like financial literacy, there's just more things that I know.
Yes.
So is there any sort of document or anything that I can do where I can, like, where my parents can allow me to be their representative?
That's where a durable power of attorney will come into play.
Okay.
So the durable power of attorney can give you those rights, but they need to be specific. Yeah. So inshallah, that'll be okay. Next question.
Assalamu
Salam.
Can you comment on the difference between a will and a living trust in terms of, like just for future children, if there is any properties not paying taxes and things like that? Is that something that's allowed?
So, and the difference between a will and a living trust vis-a-vis taxes on properties, is that the question? A will is not going to do anything for your properties and its taxes. A will simply allows you to avoid the state from applying its own rules to your property at the time of death. Now, depending upon the type of trust that you get, whether it's revocable or irrevocable, and who the beneficiaries, then there might be specific tax treatment for those trusts. So you might need a trust and a will, but you always need a will. Yes?
You want to pray now?
You want to pray now?
Yeah.
What if we don't want to?
We have to. Don't give
I'm waiting for the fatwa from them.
Tricky fatwa. What do you think? Give like 20 minutes of time after Salah?
Yeah, of course. 20 minutes after Salah is great,
Yeah,
inshallah ta'ala.
we can inshallah get like 20 minutes after Salah. We can keep it
Yeah, we'll do it in the musalla.
in the Musalla inshallah. Jazakumullah.
Okay, let's get ready for Salah. The adhan's when?
No.
Now?
No, it's not.
Yalla. Oh, now, when was the adhan? I didn't hear it.